All right, hello and welcome everybody. It's Doug here with the LincolnList.com. This is the Stock Market Weekly Review for the 9th of May. Hope all is going well with you and your trading. As I always say in the beginning of these, if you're struggling, man, a DVD, a book, that's not going to get you to the next level as a trader. It'll help. It'll provide you knowledge. The only way that you're going to achieve what you want to achieve is you are going to have to do it. You're going to have to go out there and apply those principles, and you're going to have to apply that process and execute that process. As we always say at the Lincoln List, it's about idea, execution, and management. You have to have great ideas. You have to be able to execute those ideas with perfection. And then when you're in those ideas and you've executed well, you have to be able to manage, because the market will change its complexity all the time, and you have to be prepared for anything. And what helps more than anything is being in the right kind of community where people can elevate your game. You always get better around other people. Like, competition breeds excellence. So if you're sitting there and you're in a rut with your trading, you're not 100% happy where you are, you just want more. You want more, visit the LincolnList.com. You see us trade live every day on screen, but it's not about displaying trading skills. It's about building the right kind of, being in the right kind of community where you have people that can help you with trades, where you can bounce ideas off, where you can see and learn firsthand how traders approach the market, how they think about how they see this stuff play out. And then you learn that and you build from there. And then that's how it's done. That's how you learn, and that's how you get successful. So enough of my rant. If you need any more information, visit the LincolnList.com. You can take a 14-day free trial. Now let's talk a little bit about the SPY. Now, we were in this nice little stretched out orderly selling. We hadn't seen much of that. It was really buy the dip pretty much since the 11th of February here. It was just a buy the dip. You had a couple of red days, but you know, the market would kind of toy with some red, go red, and then it would just get snapped back up, or it would go down 100 points, 150 points, and it would just kind of melt back up through the midday and maybe close just a few points in the red. So pretty much until then, you hadn't seen any selling. Now, once you got around this point in April, you had all these people talking about new highs, new highs. You had that whole new high euphoria. Well, now, since this little pivot from the 22nd, we've kind of just started to roll over. Some of the short-term moving averages faded now down into the 50, and you're not really hearing any of that talk anymore. Now it's like, well, whatever happened to that? So you've kind of got a good fade. It wasn't until here Friday you got a pretty good push towards the end of the session. You know, you started to get this nice little gear up towards the end. It's the first time we've seen, I wouldn't say the first time we've seen it recently, but a nice little solid close here. So will we build on this? I have no idea. We're going to have to wait to find out. If you're, well, let's just take a look at a couple of levels and we'll go from there. If you're looking for downside rotation, or you're wondering, is the market going to go lower, you got to look at this area right here. This was a pretty decent technical area. Let's say let's say 204 to about 203.5. You had a lot of consolidation through the early part of March right here into this 204 spot. And then that's where this 50 moving average is. That's what my red line is on the chart. And you just kind of sunk down into that here on Friday. And that's where pretty much bounced right here at this 203.82 right here, intraday pivot on the 5-minute chart. That's about right where it bounced, about right off the 50 moving average, and then that was the lows for the session. Up we go right to the close. So the key will be, if you lose this, you know, let's say you lose this early, then I would think you're going to come down into some of these other levels. You got like a 201 that might bear some importance. It's not too far away. You might want to go back and look at this little consolidated area from the 8th of March. Go back here, maybe 198s down into the 200s or something like that. So if you get a close under that, we might see some lower pricing here, or some rotation. I don't have the 100 moving average on the chart, so maybe you'd want to use that as a guide. So kind of look at, you know, 202s and flat 200s to the downside. Now, if this is able to build or hold early in the week, it could start to see, you could start to see that melt work back up. I wouldn't start thinking over bullish here unless you got back above the 10-20 moving average, which is like 207, and you'd need a good close above 207 and probably a couple of tests to just kind of confirm. But I think if you got above 207 and you started working into the 209s up here, then all of that talk from back here about all-time highs, that's going to come back, and people are going to get optimistic about new highs and all happy and jolly and bullish. And then you might see that melt up come in. Emotions are an incredible thing in market trading. So kind of look at those levels if that's what you're paying attention to in the market. It doesn't really make so much of a difference when it comes to stocks sometimes, because this is a great time with earnings season. There's been a lot of great opportunities, most notably this AAWW. If you guys follow us on Twitter, I mean, this was a monster of a trade. I love shorting parabolics. I mean, this is something that everybody should understand, or at least grasp, even if you don't want to do it. Just understanding, because there's just people, this is what emotion trading is all about. People chasing a stock that's up 40% in the morning is like they're just not thinking logically. Almost every time, if it's not a microcap or a penny stock, those are a little bit different in the way they operate with the pump and dumps. But if it's something like this with this kind of volume on it, then you know what? These ain't not going to hold. This was a monster trade for us, and you don't always see them this exaggerated. I mean, 10% is usually what I like to prey upon. Is when I see 10% moves gapping and running in the morning, I almost short every single one of those. But boy, a 40%er is a gift. So I just love these. And earnings season is just like a hotbed for trades like that. And people will say, don't trade earnings, right? You hear them say, don't trade earnings, don't trade that, because yeah, trade earnings, because these, if they're if they work this way, if it's just a grind up, I don't short grind up. It's not about being up a certain amount. It's all has to do with not only being up a certain amount, but how you go up. If this was a grind out, it would have been a different story, but this big old vert is just a slam dunk. So let's see what we got here. There could be a possibility for some of these. One was this, I'm going to call it SANCR, SNCR, that's how I'm going to pronounce it. But this was a pretty good trade here off the morning pivot. And then you got back into the grind, and it never really kind of went vertical to let another entry come by. So I just kind of left it there. You could see a good, let's take a look at the daily. You could see a good run. I think if you go maybe 36s, you're going to be to the opening price for the year. This would be a great short. If this thing would go vertical and catch some momentum early on Monday, I would love to short this one. And I'll show you something this might turn out to be. It was TDC. Again, if you're following us, you know all about this because I was talking about it on Friday. This was another good one. Just a good second. You don't always get a second day move on us. This one had a nice little gap up here on Thursday, and boy, it just like lit the lamp on Friday, just going super vertical. It took a little while, a little bit different here than like you saw with AAWW, where it kind of A-frames, what we call it sometime, or TP. This thing just kind of tried to do it again before it really, really rolled over. Nice long selling right up in there. So you might see something like this on this SANCR. If it can pull that early maneuver like that, throw you in a couple of big old steep greens, I'd be pretty interested in shorting this thing. Same could be said for OKE. A lot of these are going to be day 2 moves, and they could easily be replaced by, if there's news over the weekend or something like that, or a big earnings play on a Monday. That might take precedence, but you got a couple of days here working with this, and this has actually been a longer-term uptrend. This thing is awful grindish, going back from the 24th, pretty much when the market pivoted. This thing's never looked back. You've had some red days, but they haven't been much. Just keeps flagging. You got good separation from the 20 moving average, which is all the way down here at 34. So I'd be looking at this whole number. You're 39.75. I would figure this thing's going to roll through 40. And it's really important, if you're going to short something like this, again, it's not about it going up a certain percentage. It's also about how it goes up. If this thing doesn't go vertical over 40, it's probably not worth it. You probably won't have the range that you need in that stock to capitalize on the cash flow that you're looking for. So kind of look at 40. See if you get vertical. They all have to be vertical like that. It's been doing that, last 2 days. You got a Thursday pop, you had a Friday pop vertical here. So, give me a Monday morning juicer, and I'd be more than happy to try a little bit of a short there, and it would look pretty good. OKE. So put OKE1 Kenobi there on the list. Now let's look at FMC. FMC not too bad. This is another one that's up. This might be something that's for. You might want to look at this as possibly a swing trade. You got a nice. This flag actually could go either way on something like this. You got a nice, it's holding the first initial rip. You know, a lot of times these things, some of these will sell off, some will hold. So it's kind of deciding right now after this very big vertical move where it wants to end up. And you got a couple of levels. If you're looking to get short on something like this, I'd say underneath of this, let's just set an alert for it so we don't, 47.35. Let's say 47.35. You go underneath of that, you should connect with this moving average down here at 45 bucks. So something you want to keep an eye on. It might be a little bit more of a swing because volume's starting to get a little slow in it, but that could change in any moment, especially when certain technical levels are broke. Now, you certainly could buy this too over 48.80. You know, you take out the top side of that if it consolidates for a few days and then pushes up here. You might want to look at that. It's not the trade I would take, but that doesn't mean it's not a good idea or it wouldn't work. It's just a preference. You might want to look at that. You got a nice little pull, maybe that'll rip through there and go, and you can get a nice little long if that's your thing. And last, how about a little bit of FB? You know, the fangs took a beating there a little bit with the market, but Amazon, Facebook, these things are acting like there's no problem. This thing was just gearing on Friday, but then when I looked at this daily, I went, look at this little spot here from the earnings. It's obviously set in a pretty solid, you know, mid 116 pivot. This looks to be like a spot here that's going to hold for the short term. And, you know, with this strong close here, you've got to be paying attention to this upper area of 121s. I would almost think the way this thing trades, if it gets up inside of this 120, it's going to sniff out that 121. Now, a breakout of that could produce a very nice breakout trade. And one of the things with Facebook is it does have a little bit of range to it. But a lot of times it does it for a $119 stock. You'd be looking for a little bit more sometimes, you know, like getting vertical or like it's just sort of orderly, for a lack of a better word. But this is a pretty good close. It's something to be watched, especially if the market wants to try to make an attempt to get back up into the all-time high discussion. Then you'd have to look at this. You know, this is possibly a good breakout, and all eyes would be on something like this, and you'd have substantial volume. So you get a good breakout above this 120, 121. It's something that you ought to take a look at. You might see a good 125 print on this thing. Might still gear up, maybe even a 130 over the week. You never know. So let's leave it at that. There's quite a few stocks there to talk about, a couple of different ideas. And, you know, again, it's all just hypothetical because when the market opens and with all the variables that are involved in market trading, you never know. You got to be prepared. And that's kind of what I tell traders all the time. It's about your ability. You can do all the homework you want. I'm not a person that's against homework, reading books. It may sound like that, or studying, but there's only so much that you can do of that. You got to get into the game. You got to have skin in the game. You got to be in the game, and you learn by doing. You learn by repetition. You know, you've got to just constantly chip away at it. And it's about making the mistakes. You got to do it. You make mistake, you learn from it. You do, and then you build on that. You make another mistake, and you just keep doing that. You just keep evolving, and it never stops. And every year you get better and better and better, and your income goes up, and you feel more confident, and you learn new things. And it's a beautiful thing when it works like that. The longer it takes for you to cross into that barrier, the worse this gets, because you stay in that hole. You get frustrated, and then you start getting out. You know how the frustration cycle works. You start getting frustrated, and you say, you know what? I got to make something happen. And when you get in that mode of saying, I got to make something happen, then you start taking really dumb trades or revenge trades or getting aggressive with trades that you shouldn't, getting ahead of yourself. You know, all of these things start coming in. It's like a waterfall, and it starts exploding on you. So I'm kind of ranting here a little bit, but the point is, I think you know. If you're looking for help, you're looking to elevate, you know. Come visit me. Take a look. Every trade's made live on screen. It's like nothing you've ever seen. If not, thanks for watching this video. Thanks for listening to me rant and talk this long. If you made it this deep into this video, then bless you. You're amazing. Other than that, you guys take care of yourself. I will talk to you soon, and have a great week of trading.